Bajaj itself is a 100-year-old brand. So for us, how the brand is perceived, the kind of trust in the brand is extremely important to us. And one of the things that we found was, for most Indians, right, we deal with a lot of friction in our lives. Doing anything is not easy, right? Yeah. Financial services doesn't have to be so, right? And so people look for simple solutions, just consider that, if you can do a simple process, it's done. I don't need to worry about it. Right? So that's really what we are focused on, that doing financial transactions should not have any hassles for you. What we've tried to do is bring day-to-day technology, as I said, for example, on WhatsApp, right? You can actually reach us on WhatsApp at any point of time. You can do transactions, whether it is commercial, non-commercial. You can even do redemptions, because one of the things we found was people say it's very easy to invest, but then taking money out should also be as easy, right? And it should be, right? So those are the things that we've really tried to focus on to make your financial life and dealing with your financial life and processes around your financial life as simple as possible.
Hi folks, welcome back to Paisa Vaisa. We've got a really special episode lined up today in partnership with Bajaj Finserv AMC. We have an exclusive conversation with Ganesh Mohan, CEO of Bajaj Finserv AMC. As a CEO, Ganesh is redefining the future of investing in India. With over 25 years of experience in finance, strategy and business transformation, he's held leadership roles at Bajaj Finserv and BCG. Under his leadership, Bajaj Finserv AMC is focused on delivering innovative investment solutions that align with the evolving needs of today's investors. Whether it's adapting to new market trends or leveraging technology to enhance financial inclusion, Ganesh is here to share insights on how Gen Z can invest with confidence and secure their financial future. Welcome to Paisa Vaisa. Thank you so much for doing this for our audience.
Thank you for having me here, Anupam.
So you've had an incredible journey in the financial sector. Can you tell us about your background and what led you to the Bajaj Finserv Group and then the AMC?
So my background is starts from a very, very humble beginnings, right? My father was in the army. He was an officer in the army. My mother was a school teacher. So very, very humble start to my life. But the advantages we got were, fantastic education, as well as excellent facilities that the army provides. So my career goal was actually to become a fighter pilot, right? But unfortunately, my height got in the way. So at that time, there was a height limitation in terms of who could enter the cockpit above a certain height. So I had to choose a different career. So that's when I did engineering and then went on to do my MBA. I joined BCG after that, which is a consulting firm. Worked with them for about 16 years across India, US, Middle East, Europe, and then came back to India, at which point I joined Bajaj Finserv, and I was heading strategy for the group. Right? So working across all of the group companies on the lending side, on the insurance side, as well as the new companies we were creating. And in strategy, you often look at what are the opportunities in the market that we are not present in today, which we should be. And one area which was clearly coming across, Anupam, was on the asset management side. So for us, we wanted to really build out that position, because if you have to be a retail-oriented financial services player, not having a wealth or an asset management business is clearly a significant gap. So that was sort of what brought me to this space. And I would say it's now been almost 10 years with Bajaj Finserv. It's been a fantastic journey, from both strategy to an operating role at this point.
Yeah. So since stepping into the role of CEO, what's been your greatest challenge and how have you approached it?
I think the very first learning as a CEO is you cannot do everything yourself, right? So you obviously have to build a team, and you're only as good as your team, right? Now, when you're building a business from scratch, right, that is actually magnified because you don't have a team, right? You have to build it from the ground up. It gets even more tricky when you're starting without even a license, right? So imagine my situation 3 years back. There's this guy who's got a PPT and a vision, and he's trying to recruit people who are experts in their domain, doing very well in their fields, well settled in their companies, and trying to motivate them to join a company which doesn't even have a license yet, right? So it's not an easy task at all. But what it did was it actually forced me to sharpen my thought process, right? What would convince someone, right? And what would I have to do differently compared to 40 other players in the market to bring the best brains, best talent over, right? Because for us, it was very clear that when you build the foundations right, if you have the right people on board at the beginning, talent attracts talent, right? So for us, getting the right people on board, making sure that our differentiators are very, very clearly articulated, and then ensuring that we build on that momentum was really, I would say, the first and biggest challenge that we faced.
So now Bajaj Finserv AMC is a relatively new entrant in the asset management space, right? There were many before you, and the asset management industry in India is quite old. So how did you see it, differentiating yourself from all the other players, legacy players in the industry?
Yeah. It's a very, very important question, and one I get asked a lot, right? Because there's 40 players that were already present when we joined.
40?
40. We were the 41st, right? And there are more that are coming, but there were already 40, and many of them had been present, as you say, for close to about 30 years, right? So for us, it was really how do you differentiate yourself in a crowded marketplace? And where we focused our attention, Anupam, was really around how do we bring something that is unique and differentiated to the marketplace, right?
Okay.
Because if I'm offering exactly the same, right, there is no reason for somebody to come and invest with me till I develop a track record, maybe wait for 3-5 years and then invest, right? So the key areas we focused on, right, since this is a business of investment, was how do we differentiate in the area of investments itself, right? So we looked at certain areas, let's say, which have been deployed globally, certain areas in the field of investing which make a lot of sense but have not yet been brought to India.
Sure.
And we found that there was one area which was particularly around behavioral finance, where we were seeing a lot of global asset managers, hedge funds, sovereign wealth funds also utilizing these concepts, but not a lot was being done in India at that time. So we brought that into our investment philosophy, and we said that our investment philosophy will have, of course, the information edge, the quantitative edge, which are sources of alpha, but also the behavioral edge, right? So that was the first and most important differentiator, where we brought behavioral finance into the field of investing in India. But that's at a philosophy level, right? And people don't consume philosophy. So ultimately what people look at is the products. So within our products, what we tried to do was differentiate again at a very fundamental level, right? If I'm launching fundamentally an active equity fund, right, I have to have a reason why it can outperform the underlying index, right? Otherwise, there's no reason for someone to come and invest with me. So we focused our time and attention on what are the areas, what are the strategies that have worked against passives, which have done well against passives. And again, we found that globally, while of course passives have grown a lot, there are certain active strategies that have worked. So that's how we've framed each of our equity strategies, right? So whether it is mega trends in the flexi cap or moat-based investing in the large and mid, concentrated large caps, or a contrarian strategy in our multi-cap, every single fund we have tried to differentiate. The third pillar that I would say, Anupam, has been in the field of technology, right? And our view is, in the asset management business particularly, the role of technology can be, a lot more than what has really been done in the past. And by technology, I mean day-to-day technology. How do we use things which everybody is comfortable with? WhatsApp, QR codes, right? How do we make things easy for people to deal with us, whether they're distributors, whether they're investors? Can we make things simple? Can we make their lives easier when they want to invest or transact with us? So those are the kinds of things that we've really focused our efforts on.
Very interesting. That kind of leads me on to the next question also, gives me a clue as well. So when you look at Bajaj Finserv AMC's progress so far, what are some of the, or maybe even just one, initiative or innovation that you're particularly proud of?
So there's something which we launched, which is an industry first, which is something which we call Savings Plus.
Okay.
Right? So I think this is an initiative which has a huge opportunity for anybody having a savings account, right? Now, fundamentally, our savings account is a product which typically gives us, let's say about 3.5% kind of an annual return, fully taxable, right? Now, as a financial expert, typically you would not want to invest in such a product because it doesn't even meet inflation, right? And it's also taxable. But it's also true that most of us keep way too much money in our savings accounts, right? So it's in a way an inefficient solution which we've been living with, right? And there were reasons, we always used to keep a little extra. We never knew when you might need to have an emergency, etc., right? But today, using technology, there are things like account aggregator, where once customer gives consent, right, you have the ability to assess the last 6 months bank statement for the customer and identify how much surplus balance the customer has been keeping, right, in their savings account. Surplus means after meeting all of their expenses, credit card bills, EMIs, so on and so forth. Now, once you identify that, it's also possible to very easily identify how much incremental return they could make by investing that surplus in a liquid or an overnight fund.
Correct.
And that can be quite substantial, right? So we did the calculation, and for every 1 lakh that you keep extra in your savings account, you're actually losing almost 10 rupees every day.
Wow.
10 rupees every day, right? So this is a significant lost opportunity for many, many people. At a country level, Anupam, we keep about 20 lakh crores in savings accounts in the country, right?
Huge number.
That's a lost return of almost 80,000 crores a year, every year, right? That's like $10 billion. So recently, FIS pulled out $10 billion and there was such a huge noise in the market on that. But we lose that amount of money every year, right? So what we've done is we've created a solution for this,
Sure.
where it becomes a very easy process for people to identify their surplus balance and make it work harder for them, right? And generate extra returns on their own hard-earned money, right? Plus, redemptions are also very, very easy in this. There's an Insta redemption where up to 50,000 people can actually redeem within a few seconds.
Oh, okay.
Right? So even liquidity is very, very easy on this. Anything above 50,000 within the next day, you get that money.
Yeah.
And most people don't need 50,000 or above in a pinch. And if they do, then they typically use a credit card or some other payment instrument, right? So we believe this is a game-changing sort of an opportunity. And by the way, when something like this was launched in China, right, this actually became the world's largest money market fund.
Wow.
Right? And the return differential was very similar to what it is in India.
Okay.
Right? So the conditions are exactly the same: large population, return arbitrage, and that's really, I think, a huge opportunity that we as Indians are foregoing at this point. So it's almost a national kind of a crisis that we need to address.
Okay. So the mutual fund industry is evolving quite rapidly in India. What is one thing about it that you think young investors might misunderstand?
So if you look at the heart of it, right, mutual funds, typically most people invest in equity funds, right? So a lot of investors think that it's a portfolio of equity funds, I can do it myself, right? What they end up missing out is there is a lot of value of fund management which is not necessarily easy to see,
Okay.
right? So portfolio sizing, allocation, decisions of when to churn, tracking and research of the companies, these are things which a portfolio manager, this is their day-to-day job,
Yeah.
right? For most people, you cannot devote that kind of time, right, unless you're 100% dedicated to this, to do all of these things, right? So a professional fund manager actually can add a lot of value to all investors. The second aspect which most people don't know about or have not fully appreciated is the taxation structure within mutual funds, right? So transactions within the fund structure are not taxed, right? So if you were, let's say, within a year doing a transaction in your own equity portfolio, it would be taxable at slab rates.
Correct.
Right? Now, within a mutual fund, that is not so. So there are significant benefits that accrue, and over a long period of time, that compounds as well, right? So these are, I would say, a couple of relatively large value drivers that mutual funds as an industry provide, which many people are not aware of.
It's also very similar to the next question that I have, because young investors today are skeptical of traditional financial institution. There's been this probably change of thought, or maybe it's how this generation functions. So how is Bajaj Finserv AMC working to build trust with this new generation of investors?
Yeah, this is a very important point, and particularly relevant for us, right? Because Bajaj itself is a 100-year-old brand, right? So for us, how the brand is perceived, the kind of trust in the brand is extremely important to us. So our marketing team actually does what we call a brand track, right? And we actually look at what are the things that matter to customers when it comes to financial services. And one of the things that we found was, for most Indians, right, we deal with a lot of friction in our lives, right? Doing anything is not easy, right?
Yeah.
Financial services doesn't have to be so, right? And so people look for simple solutions, just consider that, if you can do a simple process, it's done. I don't need to worry about it, right? So that's really what we have focused on, that doing financial transactions should not have any hassles for you, right? What we've tried to do is bring day-to-day technology, as I said, for example, on WhatsApp, right? You can actually reach us on WhatsApp at any point of time. You can do transactions, whether it is commercial, non-commercial. You can even do redemptions, because one of the things we found was people say it's very easy to invest, but then taking money out should also be as easy, right? And it should be, right? So those are the things that we've really tried to focus on to make your financial life and dealing with your financial life and processes around your financial life as simple as possible. And we believe that over time, builds trust in institutions.
Okay. What do you think is the biggest shift happening in India's investment landscape right now? And how is Bajaj Finserv AMC positioning itself to lead this change?
Yeah. So I think if you look at the investment management landscape itself, right, I think India is moving from a land of savers to land of investors, right? See, in the mutual fund industry, we have totally about 5 crore unique investors, right? Which I think is a very, very small number given where we should be. If I just give you an example, FDs, right? We have about 25 crore unique FD holders, each having average ticket size of about 5 lakhs.
Oh.
Can they not be mutual fund investors, right? So over a period of time, I think that shift will happen. It is something that we have seen in market after market, right? That savers eventually become investors. We actually compared markets like Malaysia and Thailand, right? And when they went through the journey that India will go through in the next 5 to 10 years, which is really the GDP per capita of $2,500, which is where we are now, to about $5,000 or so, right? So while GDP doubles, right, the mutual fund AUM actually increases by a factor of 3.5 to 4x, right? So it disproportionately grows, and most financial services follow the same kind of trend. And that happens because people also move away from their meeting daily obligations to having a little bit extra, right? They want slightly better things for their new homes. They want bigger homes. They move from 2-wheelers to 4-wheelers. And at the end of the month, they have a little bit extra left to invest as well. And they see that their future is brighter, right? So I think the kind of opportunity that India is giving in terms of growth, the kind of opportunity the markets will also be providing as to support that growth, I think is a great opportunity for people who have historically been savers to actually participate in that value creation and become investors.
So, young investors, right? By nature, I guess they focus on short-term gains. Right? What's your advice to them about balancing short-term needs with long-term wealth creation?
So, long-term wealth creation can often feel boring, right? In fact, a legendary investor once called it that good investing is like watching paint dry, right? Now, that is partly true, right? But it just is about doing the basics right over a long period of time. So it can feel a little bit, boring, right? While investing in the next new fad, whether it is F&O, cryptos, online gaming, whatever have you, those are very interesting. They have, let's say almost a daily, you see a market movement, and it gives you that dopamine effect as well, right? So clearly there are two very different kinds of things, two very different asset classes. The advice I give to most people is, see, it's impractical to tell them don't do only one and don't do the other, right? It's people are humans at the end of the day. So we tell them, can you compartmentalize, right? Can you maybe say 90% of your wealth is oriented around, creating wealth for the long term, right? And that should be your focus. And maybe 10-20% is what you keep for, what can be, sort of more short-term things which, interest you. And also, it keeps them engaged, right, in the market. So that's really what we do. Can you compartmentalize into two simple areas? Yeah.
What's one myth about investing that you think needs to be debunked immediately? Myth about investing.
So investing starts from sort of buying low, selling high, right? That's the traditional basis, right? What most people I think have misinterpreted this is to try to time the market, right? That you should buy when the market is low and sell when the market is high. You have to try to time yourself, right? So there's, I think, a Morningstar research report which actually shows that typically the returns that a fund makes versus the returns that the investors in those funds make over the same time period, no matter what type of fund, there is a gap of about 2.5 to 5% every year, right? Now this happens because people try to sort of churn in and out of the fund at the wrong times, right? So they'll typically buy when actually everybody else is buying because they don't want to sort of miss out. So they're typically coming in during the feeding frenzy. And then when the markets are falling, then they panic and then they try to sort of exit their positions. What they've basically done is they've locked in a lower NAV, right?
Yeah.
And then when the market goes up again, they feel like they need to come back in. This over a long period of time, right, results in people losing out significant return, right? And that's at least 2.5 to 5% every year.
Oh,
Right? That's
okay.
very substantial
It is.
losses, right? We talk about fund manager alpha, right? And that can be a few basis points, here and there. But 2.5 to 5% every year is very, very large, right? So this is something which we tell people that being patient with your investments, right, is very, very important, particularly with longer term money.
Sure.
So keep aside the amount that you don't need for the next 3-5 years, and be patient with it, right? Market will eventually reward you, but market rewards patience.
Yeah.
It's a system for it's a wealth transfer system between impatient investors and patient investors.
investor. Okay. Now, since we are talking about debunking myths, the current market sentiments that are there as of now are some, it's kind of might invoke some worry among the younger investors, right? So how do you think the younger investors should approach this kind of turbulence, this kind of volatility, and what should be their mindset?
Yeah. So equity markets are not a one-way street, right? They always will give some level of volatility, turbulence. It's a little bit like in a flight, right? Sometimes you get the turbulence midair. What the pilot tells you is buckle up, stay seated, right? That's precisely what you need to do, right? You're still traveling from point A to point B. Nothing has changed in that. There can be some mid-flight turbulence. If you have opportunity to take advantage of it, do so. Otherwise, at least sit tight, right? The important thing for most people to realize is, equity is a long-term investor's game. It is not about short-term trading in and out, right? Currently, if I look at the market, the fundamentals have actually gotten even better, right? If you look at the budget, if you look at the eighth pay commission, even if you look at the US-India kind of relationship, there's been no direct sort of impact that was being feared. So a lot of things have actually, from a fundamental perspective, gotten better. Technicals, yes, they can move from time to time. Flows can move from time to time. Sentiment can change from time to time. But that for good long-term investors creates an opportunity, right? So my mindset would be at least stay still, right? If not, take advantage. And stay still is very different from doing nothing, right? So that's something that I keep telling people, that learning to stay still is actually an art, and it's not an easy art.
Yeah.
Right?
So finally, if you had to leave Gen Z with one key message about wealth creation, what would it be?
Yeah, so I have 3 kids, triplets actually, who just turned 19 and they're off to college. They're all interested in investing, so I gave them some advice, and if you don't mind, I'll share that same advice with your viewers as well, right? So wealth creation is actually a very simple formula, right? It's actually good behavior to the power of time, right? So do the same good behavior over a long enough period of time, you will create wealth. For young investors, the biggest weapon they already have, which is time. Time is on their hands, right? It's on their side. So what they need to really focus on is good behavior, right? Good behavior is about doing the simple things regularly, persistence with doing the right sets of things, right? So even if I take a look at an example of an SIP, right? A 10,000 rupee SIP over 30 years, you will invest probably about 36 lakhs, you will make about 3 crores, with let's say 12% kind of an assumed return. You increase that by 10% each year, that becomes close to 8 crores, right? So this is the kind of wealth that you can create, right? The Indian market is one which is actually over the next 20-25 years poised for massive growth. So we're all very fortunate, we're very lucky to be born in India at this time and have a product like a mutual fund that we can take advantage of, right? So we're probably some of the luckiest people in the world. When you also have time on your side, I think you should really take full advantage of that. So that's the advice I would give.
Did your kids take that seriously so far?
I think so. Let's see. They've started their investment journey, so I'm wishing them good luck as well.
And on that note of good behavior, discipline, and skill, that is a wrap on today's episode of Paisa Vaisa. We had an incredible conversation with Ganesh Mohan, diving into the future of investing, the evolving role of technology, and how young investors can build long-term wealth with confidence. A big thank you to Ganesh for sharing his insights and breaking down what truly matters when it comes to smart investing. If you found this episode helpful, make sure to subscribe to the Paisa Vaisa YouTube channel and also follow us on your favorite podcast platform for more expert conversations on finance, investing, and wealth creation. We'll be back soon with more insight to help you navigate your financial journey.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.